What's up guys, Johnny here, and I have another exciting video for you today. In today's video, I want to talk about the important considerations that you need to make as a new investor. It's going to be a great video, so stick around until the end to hear the last tip that you should know about. So, risk tolerance is one of the biggest considerations for new investors. Before you start investing, you will want to know what your own tolerance is. Now, do you have a high tolerance for risk or a low tolerance for risk? If you have a high tolerance for risk, then I believe that you are a little bit more acceptable of possibly losing your money if the trade does not work out. Now, if you're one of those people who's uncomfortable and is really stressed out and cannot handle the sudden loss of money you put in, then one, I would either lower your risk tolerance and invest in companies that you know will at least go up over time, or I will not even invest at all, do more research, then go back to investing. Risk tolerance is important. You don't want to invest $10,000 on a speculation stock and lose all your money if you do not want to play a high risk tolerance play or know how to make those plays and cut your losses. I would recommend staying with low risk tolerance companies that you are comfortable buying and only investing money that you're comfortable losing. Everyone wants to make money. Everyone's comfortable with putting money in and hoping that we make it. But if you put money in that you're not comfortable losing or can't even afford to lose, then you should not be investing. That's number one. Okay, risk tolerance. Number two is you got to have a plan. What's your financial goals? Like, what are you aiming to do? Are you just throwing money in there, hoping that you're just going to get rich one day? Or do you have a set plan and goals for your financial future? You could establish short-term goals, long-term goals. You can do both. You could do goals in between. Now, but you have to have an understanding of what goal you want and then make a solid plan. So let's say you want to make $10,000 by year 5 of investing. $10,000 in profit, right? Let's just say that. Well, you would have to set up a plan to make $10,000 on an investment or build up an account to that much. Then you would have to say, okay, well, every year I need to put in, if it's 5 years, I need to put in $2,000 a year. And then from there, break it down 12 months. Okay, so good to go. I got to put in, a little less than $500, about $400 and something in every month. Break it down again. Okay, I should be investing about $100 a week. Okay, so now you have a goal, you have a plan, and you know where you're going and what you're trying to achieve. Now you could also do things like this. I want to make $100 in passive income by the end of year 1, which isn't very hard actually, because passive income can be earned through dividend appreciation and through various other methods of investing. But let's just say dividends. You want $1,000 in dividends every single year. Well, if you have a dividend that pays out roughly 5%, then you would have to put a significant amount of money in to get the $1,000. If you have a higher risk tolerance for a higher dividend payout, which isn't always going to happen, or it's not going to be as steady as some of the lower yielding dividends, but you can still get 10% a year. So if you want $1,000, 10%, you'd have to put in 10 grand. 10 grand would make you $1,000 in dividends. 5%, 20 grand. 2.5%, 30 grand. It'd be a lot more. So what you really need to do is just focus on establishing a plan and know what your plan is and then take it from there. Now, the next one for beginners, it's interesting. The next one for beginners, you have to decide if you're going to be an active investor or a passive investor. And there are 2 types of investors. There's actually several types of investors, but we're just going to talk about these 2. Now, an active investor is someone who is going to be constantly looking for new deals, looking for single stocks, looking for speculation plays, possibly doing day trades, swing trades, intraday trades, short-term trades, stuff like that, scalping, and there's a lot of different words. But for now, as a beginner, you only want to know and identify if you're an active investor or a passive investor. Everyone would probably want to be a passive investor. Put your money in, forget about it, let it grow, bada bing, bada boom, end of the year you have more money, right? Well, that's not always the case. If you want to do passive investing, that's fine. What I would do as a passive investor would be to automatically invest money in a specific amount of stocks or ETFs or something like that, to where every check or every month you start adding money and it's automated. Boom, passive. You don't even have to do nothing. Along with passive income, I would then take my trades to a new level. Am I setting up stop losses? So then I forget about it. They go up and they go up and up and up until they go down slightly, cut your losses and you make profit. Or are you a long-term trader and you're looking for dividends or for speculation or not speculation, or growth? Are you looking for dividend income monthly, quarterly, or are you looking for growth over a span of a year or 2 or 10 or 20 years? Now, if you're an active investor, a good way to identify that would be you are constantly checking your portfolio, you're buying into positions, you're selling positions, you're creating multiple stop losses, you're creating multiple orders, you're doing more of short-term plays, swing trades, scalping, then that's probably going to be considered an active investor. It's not probably, it will be considered as an active investor. Active investing is completely different than passive because you are constantly looking at your stocks. You're looking if it goes up, it goes down. Are you averaging down? Are you selling when it goes up? All this different things. Are you dividend capturing? So you want to definitely identify if you're active or passive. Now, the very last two things, okay, video's kind of running a bit long, but here we go. The last thing here, or second to last, would be either to do it yourself or hire someone. Now, are you going to choose to manage your money and investments through an online broker like Robinhood, Webull, Acorns? There's a new group called Public. I think it's called the Public, something like that. Some type of robo-advisor to help out, or something of the like. Now, that would probably be beneficial if you're investing and know what you're doing. If you have money, you've done your research, you're ready to dabble in the market, you throw some money in, you get you a Robinhood account or Webull account, then that would benefit you more because you're going to save on those upfront costs compared to paying for a specialist. So, if you do choose the other route and you want to hire someone to invest for you, please do your research. Make sure you know who you're working with. Make sure you can trust them. They're accredited and they have insurance with the FDIC. All those various things to protect you and your money. Now, doing that, you're likely to incur a lot more cost on yourself. You might have to deal with advisor fees. You might have to deal with trading fees. You might have to deal with a lot of different things. But that's something that you need to decide. Do it yourself or hire someone. Now, last but not least, and certainly not least, because this is probably the most important, is you guys need to realize, okay, investing for beginners. Beginners who are investing, anything of the like, you must know about taxes, okay? If you make $100,000 in a year, you are going to get taxed about 40%. And it's going to vary in different countries and states and different things like that. It's going to vary, but let's just say about 40%. I think California is at like 50-something percent. Colorado's in the 40s. It's crazy. It's crazy. So you're going to have to pay back that money, capital gains tax. And you need to do your research on capital gains tax. Do your research on holding stocks compared to selling stocks and the time limits on such. A year or 2 years compared to a few months, you'll get taxed a little less. But again, I'm not a tax advisor or a specialist, so I'm just telling you some quick tips on what you need to do to be prepared. If you make $10,000, you're guaranteed to lose some right off the bat. So it's not really like you're making $10,000. Taxes It's very interesting. And it's something that you need to talk to your tax advisor about. But you're going to need to pay taxes on the interest, the dividends, and capital gains you earn every year. Now, you can avoid these taxes by owning investments in tax advantage retirement accounts such as an IRA and 401k, stuff like that. But I do not recommend that for 2022. I don't. We want to use your money now. We don't want to use it when you're old, in your 60s. We want to use your money now to make more money. So I do not recommend IRAs and 401ks. But at the same time, I'm not a tax professional. I'm not a financial advisor. Take this as just my own opinion. Take it how you want. All right? So, with that said, I believe those are the most important things that you need to do as an investor to protect yourself and to put yourself up for success by implementing some of these strategies, plans, and just asking yourself a couple questions. What is my risk tolerance? How much can I afford to lose if I did lose? What is the taxes in my state? What is my risk tolerance, high or low? All those things play a contribution in you making more money. But at the end of the day, guys, remember, only invest what you're willing to lose. And I'm never willing to lose any money, but I still invest. It has to be one or the other. You can't invest money and then be mad at the world because you don't have it now because you lost it. Oh, I don't trust the stock market. I'll never trust them again. You can't live in that mentality, okay? So I'm trying to do these videos, guys. We want to make you more money, not less money. And if you found this video useful, smash that like button for me for the YouTube algorithm. That's all I ask of you. This is all free information. I just ask that you support me, smash that thumbs up, and if you haven't, subscribe to my channel and click the little bell so you don't miss any of my next videos. Thanks, guys, and we'll see you in the next one.